Hello everyone, welcome to NEPC Inside and congratulations I guess to everyone. Today is our very first podcast, very first on the series, and this one will be on the financial education. So let me introduce our guests today, which is Dmitry and Alex. Dmitry, PhD in Business, Mergers and Acquisitions from Grenoble École of Business, MBA from Notre Dame in Business Management, Certified Financial Advisor, Certified Management Advisor, Executive background, quite a lot of it I would say. Also we got Alex here on the right, who is MBA in Business Administration and Bachelor degree in Accounting, both corporate and non-profit. Tax preparer for over 15 years. Okay, so it seems like we had a kind of quiet and nice introduction, so let's go to the questions we had from the Somerton, and they voted for whichever had to be the first ones. And the very first one will be, I'm pulling it up as we're speaking, the first one will be, I applied for the PPP loan last year and would like the amount to be forgiven. What should I do? What should they do? Like, before they're gonna actually get to the trouble of
FBI, open up!
Well, make sure you spend the money and you spend them correctly. And after you did that,
sorry for interrupting, but can you define the correct spending? What is the correct under the IRS code?
well, if you want it forgiven, it's a purpose. This money are given for a purpose. So let's say you can spend 60% on payroll and the rest you can spend on utilities, on the business rent, and things like that. There's a list. So typically you would have received the loan from a bank or other financial institution, and they would have for you guidelines how to apply. So talk to your financial institution where you got the loan. You have 10 months to apply after your covered period is over. That's typically 8 or 24 weeks after the date you got the money.
From the application and from the actual receival of the money?
No, from the actual day the money came to your bank account.
Okay. So, and those guidelines are listed before you're applying, exactly?
Yeah, sure.
Yeah, and if they're not followed, you might get into the...
You'll have to pay your loan back.
You'll have to pay your loan back. And if it is a loan, technically it's supposed to be under some type of percentage, right?
It's a 1%.
1% loan. So technically it is a free money. Cheap money, let's say that.
If you don't apply for forgiveness, it's a cheap money.
Yeah, because if it is a loan, if it's a 1%, it's cheaper than going to any bank right now getting the loan for the business like expansion or...
You can spend it on business expansion. That would be
a violation.
Incorrect use of money.
But then you would have to return it like within the 1%.
That's an interesting question. You're not supposed to spend it on business expansion, so that's how it works. So the very least you have to return it. The worst, there can be consequences. I think SBA says civil and criminal penalties can be applied to you.
Civil and criminal. So, but there is no like deep guidelines.
I guess
this is, it's been a moving target. These guidelines ever since the PPP program came about. The guidelines been changing pretty much every month. So there's every month new guidelines from the SBA.
At the time of filing, you have to follow the new guidelines or the guidelines you signed up with.
You have to check what's current because some of those things they apply retroactive.
Okay, so you actually have to file within the new guidelines, even if you got the money under the old circumstances.
Yep.
Let me add a couple of things. So unless we all in agreement, PPP stands for Payroll Protection Program. SBA stands for Small Business Administration. And originally, when monies were dispersed in the first round of it, it was really up to the financial institution how soon they will process your application. Then funds were depleted pretty soon. Then there was a second round, and and companies finally received the funds, and now it's going to be the third round. And third round will be a little bit more geared towards small business. So funds from the small business administrations will be sent to smaller financial organizations, and they will be meant for loans at smaller amounts. So don't expect to get something in the size of $1 million, but if you're applying for much smaller amount, like $50,000-$80,000, this is what the second round of the PPP loans are designed for.
I just got a text that you barely can be heard, like you're speaking to the side of a microphone, and it's
How about right now?
better, much better. Yep. And how many rounds is there? Is there still one available?
Yes, there is still one available that will become available fairly shortly because
it is actually available as we speak, and it will stop being available on March 31st.
So by March 31st, everyone shall apply if they would like to receive the, let's say, cheap money or the money for their business to operate.
If you qualify.
If you qualify, and the qualifications would be?
You have to be under 300 employees.
It's pretty much majority of the businesses here.
Yeah, there's small businesses, for sure. If you took the first draw of PPP loan, the first round, so for the second one, you have to demonstrate the decline in revenue in one of the quarters in 2020 as compared to 2019.
Okay, so I guess we have opened up this subject completely, and I don't see any other questions nor on Facebook or YouTube. So we're gonna proceed to the next one, Okay, so the next question, 401k. 401k may better off financially by setting up money aside to 401k plan, but before even we're gonna get to that one, what is 401k? In the United States, 401k plan is an employer-sponsored defined contribution pension account defined in subsection 401k of the Internal Revenue Code. Many employers to their employees. It is named after a section of the United States Internal Revenue Code. Workers can make contributions to their 401k accounts through automatic payroll withholdings, and their employers can match some or all of those contributions. The investment earnings in traditional 401k plan are not taxed until the employee withdraws that money, typically after retirement. In a Roth 401k plan, withdrawals can be tax-free. There are two basic types of 401k accounts, traditional 401k and the Roth, ROTH 401k, sometimes referred as a designated Roth account. The two are similar in many respects, but they are taxed in different ways. A worker can have either type of account or both types. So guys, there's your call. What is 401k?
It's one of the pension plans.
Yeah, it's a tax-advantaged pension plan. It's not just one of the pension plans, it's a tax-advantaged pension plan. What it means, it allows you to set money aside pre-tax.
Pre-tax, because like I've heard lots of rumors about it. It goes to the stock market, it goes to finance other stuff, and sometimes by the end of the work, you won't have your 401k as it is, or as you have donated or like saved through 401k.
What you want to understand is that there is no simple solution. And the reason why we're saying that is because depending on when you actually try to retire, if at that point market drops, then the value of your 401k may drop in, let's say, 50%. We saw that in 2008 to 2010. Pretty much everybody 401k dropped in value, and people were contributing all their lives, and all of a sudden they figured out that there is enough there to retire, so they had to work more to get back the value of it. So it's cyclical. And normally the financial analysts who sell 401k plans, because obviously it's not mandatory, this is something that employer will encourage employees to contribute. So the financial advisors typically would come to the employee meeting, and they will show you this nice graph that goes up, and they will say, well, sooner you start contributing, that's better, and it always goes up, and you will retire with like $3 million if you start contributing like 200 per paycheck.
When you're 19.
Yeah.
But
so what they don't say, that there is this assumption that everybody for 50 years of their work life will contribute to the plan without any kind of break, and that it will compound. And that unfortunately doesn't happen, and people get into difficult financial situations. And about 20% of all people who contribute to 401k end up basically taking a loan back and then repaying it to their 401k funds at some point. Because emergencies do happen, and the rosy pictures that the financial advisors are drawing on the dashboards in the company meetings when they try to sign up people, those are really rosy pictures.
So pretty much 401k, it's not the exact cure for your retirement plan. That's what you're trying to say.
It is not all-at-once solution that will work for everybody. It's more of the generational lottery. It depends when you need to retire, what's the condition of the market. If you're unlucky to plan to retire when you're 65 or 67, in a period when we have the next bubble bursting, then obviously you cannot predict it, and obviously then you really lost your
everything,
your contributions.
Yep.
Also, maybe not everything, but you don't have really time to wait for the market to come back up.
Gold.
Because
gold.
Yeah, let's say we know that on average a person can live so many years, and we have so many productive years to make money, and so many years in retirement. So this is all can be more or less calculated, can come up with numbers and model how much.
So from the perspective of a view of yes or no, is the 401k good or bad?
Can I say it depends?
It depends, but there may be better ways to ensure that you have retirement money other than 401k. It depends.
Let's look at it this way. Well, 401k is employer-sponsored defined contribution plan. What it means that typically your employer matches your contribution up to a certain level, 3% or 6%, something like that. And of course, you're better off. It's free money, so you contribute 3% of your paycheck, and your employer, if they have a match program. So, yes, you're better off.
You're better off with 401k.
At the same time, not all employers do contribute. So
even if you do spend those money towards the 401k, some employers don't contribute.
Not even some. I can look up percentage, but a lot of employers do not contribute. So it's just your contribution from your pocket. Also, employers' contributions are a lot of times are subject to the vesting schedule. Vesting schedule means that unless you stay with the company for typically 5 years, employer match it's technically in your account, but it's not there yet. So on average in the US right now, the employee works in the same company for about 3 to 4 years, because we're not at that time when people used to work in one place for 25 years or just during the lifetime changed employers twice or 3 times at most. We're changing jobs. And the vesting schedules that are 5 years long sometimes really do not hit the employee accounts because they do not stay that long with the employer. That's one thing. Another thing is that this is not the only pre-tax way to contribute. And I would say that a person should really think what will make more sense, to save on tax now or to save on tax later. Because maybe it's a better way to contribute post-tax using the Roth IRA plan, pay taxes now, but then when you get distribution, when you're 67 or 72, most likely at that point, taxes will be higher.
Mm-hmm.
Most likely at that point, what you're contributing now is going to...
But don't forget about the inflation levels as well. So when you had $5, in 25 years, it will be like $2.
No, but that's a totally different issue, because what you benefit tax-wise is a different issue from how market will perform or how you invest your contributions. So these are two separate stories. So if we talk about tax benefits, yeah, there's of course you contribute pre-tax to 401k, or if you want to use Roth IRA and contribute post-tax, and then when you get your pension, you don't pay any taxes on those distributions. So that can work tax-wise very beneficially. But how you invested those money, where they went, and how the fund performed or how the market performed, that's a totally separate story.
So then let's move on to the actual question. Am I better off financially by setting up money aside to 401k plan? Am I?
It depends.
Fatality.
If you have other obligations.
For example?
See, it depends. How old are you? Are you going to hit the retirement next year? Or are you, I don't know, 19 years old? You're just starting your career? Wouldn't it be nice for all of us to invest in Amazon and Apple in 2000?
I would say Bitcoin today is the thing, but
let's not go into that. But
come on, I know people that have made fortunes on it.
Good for them.
Yep. I guess it's time to sell or buy, but no one cares. So let's go to the 401k. Yeah.
So depending on the obligations, and what are the obligations could be. It could be a credit card debt. It could be student loan debt, which has a percentage attached to it. So
hold on. Your student loan can have attached percentage that will go towards 401k, or your 401k will go towards the percentage.
That's what Alex is trying to say. Is
I'm
that
trying
you
to
have
say
to
that
look at the totality of your situation.
Why
it's not a simple answer.
We're saying it depends, because everybody should build in their heads sort of like balance sheet. Like, think of yourself as a company.
Okay.
Think of your assets. Think of what you own. Think of what you owe.
Checks and balances, pretty much.
Debits and credits.
Yeah.
And then if your liabilities, if your credits outstanding, which are typically attached to higher percent than what a typical 401k will bring you in, then of course it makes sense to get rid of obligations. And then when you're clean, then you start setting money aside to 401k or IRA or Roth IRA. What I'm saying is that I'm seeing so many 401k loans at every place where I work to, because I'm seeing payroll, I'm in accounting, and I know the stories of the people. I know why they took the loans. Some of them are really taking the loans to pay for college costs.
But college costs, it's already is the loan itself, so you actually double percent on it.
Some people making not so smart decisions while they're taking loan out. All I'm saying is that some people are trying to pay for their college kids' education by taking money back from the 401k where they contributed 10 years earlier, which is basically negating all the contributions that they made. Some people have or used to have when we did not have the Healthcare Act. I've seen so many medical bills related 401k withdrawals, which basically also zeroed out people's contribution. They would pay penalties on the early withdrawal on top of not contributing for a while.
To summarize, there is no like an exact guidelines on how to make it happen. Your 401k, it is an offered, like it is offered to you by the employer, but how to actually work it out and how to operate it, you have to go to the professional in order to make it happen through your lifetime, right?
I would say it's similar to choosing your health plan, because you typically, let's say, offered 2 or 3 medical plans. For some people, it works if they choose HMO because it's cheaper. For some people, it works if they choose PPO. It's more expensive, but it covers better. So it really depends on the personal situation. What are your personal assets and what are your personal liabilities? Once you clean off the liabilities, which is typically have high percentage attached to it, then go ahead, invest. But before that, my opinion.
So it's like with the credit card. Before actually buying a house, pay off your credit card first. Just to simplify it.
You better to pay off your credit cards to keep the utilization ratio around 15 to 20% maximum if you want to get pre-authorization to buy a house if you're paying with the mortgage.
Same thing with the 401k. That means before you're actually going to get into it, you want to take care of all your debts and balances prior to actually getting to 401.
In an ideal situation, but again, if you have favorable situation with your employer who does match your contributions, you may be better off just participating in that. So, regardless of your liability side.
Okay, so I would assume that we got somewhere on 401k. It's not your perfect solution in life. It's not the response to each and every question, but still something or a tool that can be utilized in order to prosper your retirement to the fullest. Am I correct?
General recommendation that if you can afford it, participate in it and max out the contribution to the what your employer.
And before actually knowing if you can afford it, and before actually getting the master's degree in business administration or economics, you better to consult with a specialist.
Or read the fine print.
Now let's go to the next question, which is 529 plan. I have never heard of such. Are my kids better off financially if I set aside 529 plan? Now we're getting into the numbers. Like, I do know those digits, but I have never heard of such plan. So what can you tell me about it?
It's a college savings plan for your children. So parents can start contributing into what's called 529 plan. And those are just the numbers taken from the tax code. So 529 doesn't mean anything. 401 doesn't mean anything, because like with 401, like the same plan for government employees is 404, with same plan for nonprofit employees called 403. So 529 is also doesn't mean anything, just the numbers. So parents can start contributing toward the cost of future college for their children. Is it advantageous? Dmitry, what do you think?
It's a tax advantage plan. So yes.
How do you get into it? Like, where do I've never heard of 529 plan. So right now I'll be researching, but
each state runs in some form And
So I just call 311 and ask him, hey guys, I would like to contribute to 529. Can you send me out?
rather I'd like to set it up. And
So you actually call 311?
No, of course not.
So could you give me more details? Like right now we're trying to speak in very simple words.
In Pennsylvania,
you Google your state name and then 529 plan and see the option.
So since you work in a PA, do you have any details we can actually give out, at least in wording?
PA529.com, if I'm not mistaken, and this is something that is PA529.com, yeah. I did a consultation for a client on the subject a few months back, and I'm trying to remember the details now. It's not something that comes up, at least in our practice.
Well, Dmitry is looking, we can pick up another question and then come back to 529.
Okay, then should I buy a house when the house is $250,000? My income's about $50K per year, and the credit score is close to a 700. Like, that's actually average situation for the far northeast Philly, and the average price is $250 right now, since it's bursting up like I've never seen before. And 50,000, that's your average income here. Actually, a bit lower, but still.
So, let's break it in pieces. First, you have to research whether you have enough of the credit to qualify for mortgage under either first buyer loan, which is like 0% down or 5% down. It depends. I would say that
is zero down still a thing?
At least 3% down for the first-time buyers is still a thing, and but there is a downside to it. You have to pay mortgage insurance, and that costs you probably, I don't know, couple of hundreds per month.
So in a perspective of 25 years, that's going to be your down payment doubled.
You would be smart to refinance at some point when you reach
particular time frame in credit score.
So with those inputs, such as selling price of $250, let's add to it about $10,000-$12,000 that will cost you actually to finalize the sale. Let's add to it, typically you want to do something with a house, you want to renovate it a little bit, so let's add to it another $50,000. So with this input, plus 50,000 to renovate, plus 10 to close, probably you'll need to make a little bit more than 50 to be comfortable. I would say if your annual income is about 25% of the price of the house, and if you're confident enough that that income is not going to change, then of course go ahead and buy it. The question is, what we have right now is a typical situation, whether market is being
bubbled up,
overheated, and whether inventory is going to change by the year end. Right now, there is almost no inventory. It's lowest at basically 30 years.
No, but also don't forget about the migration from north. That's a lot of factors that play in. But again, the question was, like, with an average situation here within the Somerton area, your income is about 50, sometimes a bit lower, sometimes a bit higher, but that's your median.
With this inputs, with these numbers, yes, that's the comfortable number, assuming that you have a good credit, of course.
We assume it's a net, not a gross.
Okay, because from perspective of what I hear from everyone around here, and again, that's personal, non-professional opinion, just everyone's suggestion. If you do not make enough money, or you do not make like in constant amounts, but you're still eligible to purchase a house, buy one, rent it out, build your credit history on it. So that's the main thing for everyone. Like, let me buy as many properties as I can. I'll manage them out. As soon as I will have the steady income, that will be my background as well as my investments plan for the future.
Again, not as simple, because you have to understand what you're getting into when you become a landlord in any large city that tend to be a bit more renter friendly as opposed to landlord friendly. It just takes one bad renter
Or one pandemic.
That was a big one.
To have your all the hopes
and dreams broken to pieces.
Yes, that's one thing. Another thing is that I would say before somebody thinks about renting places, person should at least talk to somebody and understand how to manage property that you own, and understand.
This is why you hired the third party.
That's why you hire management company.
Yep.
Also, don't forget the costs that come with the owning the property are upkeep, repairs, mowing the lawn, cleaning the snow.
No, the problem is I do work for the rental management company, so I'm kind of confident with the expenses, but the answer had to be delivered properly to the crowd or to the community that if you're willing to or want to buy the house as an investment plan, it is a great thing. It is like a good investment if you do know what you are doing. Because when it comes to the rental licenses, all the liabilities, all the questions and answers to be resolved simultaneously, you better to have somebody with a knowledge instead of skills. Like we're talking about the 401k, but now it is the rentals. You better have somebody that will resolve or answer these questions simultaneously.
Rental is a better investment for your pension
than 401k.
If we're going back to how do you secure your pension, renting and living off rent that you receive, assuming that you're lucky enough to get good tenants, assuming that you're lucky enough that you don't lose your own
simultaneously.
Yes, and have difficulties affording the mortgage, even if renter's paying you. Assuming that all goes well, this is much better plan than 401k.
So everyone, I guess you heard it loud and clear.
I'd like
invest into the properties.
Yeah, but let me add something.
Let me finish it. Yeah. Go ahead. The camera and microphone is all yours.
A great idea to invest in properties, but I think the key question in investing in the properties and how you buy them, because you have to buy them low enough so the numbers work.
True that.
Because rental market, there's highs, lows, in betweens, but pretty much there is
a gap. Also, the renovation market is good. So you're buying the shell, you're investing into the shell, and you're renting it out.
If you can buy it at a proper price, but competition at those sales, so I heard, is very, very fierce.
So to finalize your question, should I buy a house for $250,000 with an income of 50? And
I think you're a little short on 50. So if we add the closing cost and then if somebody gonna pull a mortgage calculator, if it's 250, you're financing, so you're gonna pay like $1,100 per month on your typical 30-year mortgage.
Mm-hmm.
But then what people tend to forget, there are city taxes. There is insurance, there's other blah, blah, blah. So find if those numbers work for you. So if it's 50 net, I think 50 net is your income. So I think you can make it work.
You can make it work.
At these levels.
You can make it work, but not less. Timing is the key. And if we're talking about situation now on the market with the inventory being so low, It's a seller's market. It's not a buyer's market, how it was 4 years ago. However, we are looking into
Another bubble.
probably September, or if not September, we're looking into December of this year,
When it's all going to drop again.
when the supply is going to shoot up sharply. And that's going to be when a stimulus program is going to run out, because right now what everybody agreed on, the new stimulus is going to cover period through August 31st, and that is going to include protection for homeowners against foreclosures and renters against evictions. So if that is not going to be extended again, then what's going to happen in September? In September, a lot of foreclosures are going to happen. What is going to make to the supply? Supply is going to go up, and therefore that would be the time to start looking for, but not right now. Talk to me. Why no? Talk to me.
As of right now, I do understand the supply and demand, but since the properties are way overpriced, this bubble reminds me very much, especially when people buying everything at the price that is twice or sometimes 3 times above the market value 2 or 3 years ago. It's going to be another 2008. But that's my unprofessional opinion that is based on the correlation and the consequences that happened back then.
So you're basically saying what I just said. So
but it's going to be as big as...
If we knew back in 2007 that 2008 is coming, nobody would buy anything in 2007. We would wait until 2009.
Yep.
That's all I'm saying.
So let's finalize it. Technically you can, but if you can get the proper value of the house, do not buy a house that a year ago costed 200,000 and now it is 500,000.
Exactly. Of course.
So be careful on purchasing, and if you have a wish, it will come true just in the proper timing. But let's move on to the next question, which will be... Actually, that's the one I'm very interested in. When, why, and to whom I pay my taxes? Which taxes require filing a tax return and declaration? Why do I have to pay taxes?
Okay. Why do you have to pay taxes? Well, so that's how we collectively pay for various public goods that we consume, like defense, I don't know, roads, bridges,
Social security,
police,
fire, bridges,
I think
infrastructure.
I think I mentioned bridges. Yeah, but so that's how the all the public goods are financed, through taxes. So you pay taxes to federal government, to your state, and to your locality, city of Philadelphia, or if you're outside, all townships in Pennsylvania pretty much have some form of local tax. They tax you a small amount.
Just Philadelphia, to my perspective, is taxing, like if that would be possible to tax the tax, that would happen in Philly.
Philadelphia is very taxing locality. It's taxing to be here.
Okay, that is very nice. So just to reply to this question again, when, why, and to whom?
So when deadline for individuals are typically April 15th. If it falls on a weekend, then it moves to the Monday after the weekend. Deadline for corporations is March 15th. Again, if it falls on a weekend, then the day after, Monday after. Now, if somebody doesn't have time to get it all together, there is always automatic 6-month extension, which taxpayer can apply before April 15th or before March 15th. If it's for corporation, you're given 6-month extension. And then if you still don't have all your paperwork together, then you can get another 2-month extension. With that said, if you estimate that you will owe something, the estimated payment have to be made on time with the application for the extension. So you pay basically federal taxes. Most people submit electronically. It goes to the IRS. State taxes. Most of the states that do collect taxes get, as soon as they get notification that IRS had accepted their version, state goes next and accepts the state return. And with the localities, with Philadelphia, I do not believe you have to pay separately. With locations outside of Philadelphia to townships, you would make payment through a tax collector like Keystone or Berkheimer. And that's, some people just make online payment. On the W-2 form, on the bottom left, there is local earning and the municipality where.
So it's already been shown and pretty like
it's already
semi-prepared over there.
Yeah.
W-2.
Yeah.
But when people actually coming to you and saying that I just file my taxes myself and I find it to be a bit off, what can you do about it?
We help. We'll look at what was filed and we do the amendment if it's needed. Because after taxes are filed, then is it still 3 years?
Yeah, it's 3 years.
It's
You have 3 years to make amendment.
3 years window when
To fix your taxes.
Yes. For example, some taxpayers incorrectly show their filing status. They think they're head of households just because they're separated, but they're really still married. And so there is like a fine line. What do you choose if you're still married? Do you choose married separately and then claim children? Or do you choose head of household? Or some taxpayers choose single and then claim children. So sometimes amendments are to actually correct the filing status. A lot of times amendments are for in response to the letter from the IRS. So what happens typically? IRS would receive a return. They will accept it. They will issue refund or cash your check before they even scan your return into the system.
And then 3 years later, you're receiving the very interesting.
Typically, no, not like that. They will never do that. They will never do that. They do not call you. They do not scare you. IRS will send you like very polite, to the point letter where they will.
You messed up. Here's a way to fix it.
Yes. They will basically very professionally say, well, we show that your income was, let's say, $85,000 because we see that some company reported W-2 income of 65, and we see that 2 more companies reported $8,000 each. But you forgot 1099 for $8,000. Therefore, your income was higher. Therefore, we believe that you owe us this much. And when you receive that letter, if a taxpayer chooses to appeal, then there is a process. I believe they also give you an option to amend the tax return. It depends on the letter of, it depends on the language of the letter.
Typically, if it's something like forgotten 1099 and there is additional
forgotten.
tax.
But if you actually made more and they want to return your money, how often does this happen?
If you made more and they want to return your money, why would that be? You made more and they
No, I mean
think...
like you made less or some like how often the IRS offers to return the money instead of asking for it.
They actually would simply make a direct deposit without even telling you, and then you would say, "Oh, I got money from the IRS." Like, why?
Is that another stimulus check?
Yes. So they will simply deposit it. However, everybody now has ability to go to the irs.gov website and set up online access. Online access will give you your transcripts. Online access will give you status of the refunds. Online access will give you status of... what else it will give you? Just basically
everything you can ask for without calling the IRS.
Correct, because
They don't pick up any longer.
It's difficult to get through. Tax professionals, like, we do have the dedicated line, which is also we have to wait a little bit, but at least we know that the phone is going to be picked up. For individual main 800 number, I would think it's let's forget it, because it's not possible to get through. So set up online access on irs.gov. It will prompt to create the username. It will prompt to register password. It will ask few questions, almost as if you're trying to access your credit report. So it will ask you, okay, which 4 streets you lived before, and then you pick the street. So only you know the answer. And that's very helpful to look up what exactly IRS has on file for you. Same goes with the state. State of Pennsylvania has online access. State of New York has online access. Recently, they have improved and kind of compensated for the lack of people who pick up the phone.
Okay, so now we can actually say that IRS is kind of working fine. As long as you do have questions, you can go to the irs.gov to resolve all those questions. And if you were overcharged for any particular reason, expect a very nice check.
No.
That was easy.
Basically, the month of December, this is when they do sweep of comparing incomes. So let's say that most people would still make April 15 deadline. Some people will do extension, and some people will do another 2-month extension. So by December, IRS is doing the sweep to compare the incomes, what they received from 1099 companies who issued 1099 to people. So they will compare social security numbers.
Okay.
And this is when letters go out.
So before between April 15th and the December, you have to have everything prepped and ready in case you have any issues or you got an extra 1099. It got to be like edited and filed, or you can actually postpone it for the next year.
It is always better to talk to somebody who hires you and to discuss at which capacity you're being hired and what to expect by January 31st. January 31st is the deadline for employers or companies to make W-2 or 1099 forms available so that people can get it on February 1st. So it's always a good idea to talk through before you accept. And well, if it's a regular job, obviously get a letter of employee. If it's a gig job, I would suggest to talk to the person who hires you to understand what you will expect to get on January 31st. The rule is if you earn more than $600, you have to receive 1099, for example. So typically there is no reason to miss a 1099 unless you really work for 25 different places and you really skip one and you think that you work for 24 places, but there should be no reason to miss a 1099 form. So another sweep that IRS does is 2 years after returns are filed. This is when the letters are coming in with requests to show the receipts. So 2 years later, the IRS, if you're chosen for an audit, you will be audited about 2 years later.
Okay, so let's move on. Let's right now, 15th of April, that's going to be your kind of deadline to do the personal taxes, right?
Yes.
For the returns, when is the deadline?
It's the same.
Same
April
day.
15th.
So it doesn't go like left to right. It's simply like if you go on 1099 or W-2 before the April 15th, you got to file your taxes to obtain both. Return, no return, whatever.
No. You get your forms from
all the
wherever
employers.
you worked. Yeah. All the employers, they send the forms out by the end of January. So the latest, early February, provided there is a mail delay and so on. So you get the form. This is when you can start doing your tax return. And the sooner you do it, the better. You don't have to pay until April 15th, though. But April 15th is the deadline. Okay,
so now we got a question from abroad then. I work in the United States and additionally receive income in Russia from the leasing an apartment or any other source of income.
Good for you.
Is income for the foreign source taxable?
Yes.
So that means it's taxable in the country it's made.
And you said for foreign tourists?
No, not tourists. I work in U.S. and additionally receive an income from abroad.
U.S. taxes worldwide income of its citizens and residents. So if you have a U.S. passport,
you got to pay anywhere you make a dime.
If you have a grocery store in Zimbabwe, you have to pay the tax. If you have a green card, you're a resident,
you still have to pay taxes.
You have to pay taxes. If you don't have a green card, then we can probably count days, how many days you're present here, and depending on that.
And what's the maximum amount of days for you to be present here in order to qualify for taxes from abroad?
I have to look that up. It's really not a very simple situation.
Yeah, because for example, some people on H-2B visas that coming here for work still do have some businesses abroad.
Yeah, if you live here a full year, you have to pay taxes.
Okay, understood.
If you are first year here, you can be part-year resident, for instance. It's a dual status.
If you are a resident of United States, you make money abroad, you make money here. Regardless of where you make your money or how much money you make, you still got to pay taxes, even if you're bringing them into the country and investing them back into the country.
Doesn't matter.
Doesn't matter. As long as there is money,
you'll pay taxes.
You'll pay taxes. How nice is it?
It's inevitable.
It's inevitable. It's a nemesis. My credit score is 700. Last year, it was 720. My coworker told me to look up the Credit Karma regularly. He showed me his score 750. What does it mean? How Credit Karma is actually reflects the reality of your credit score?
It reflects the reality, but that's like vanity sizes in the clothing store. So they'd say, okay, you are S, but actually you are M. But with Credit Karma, it works in the reverse. So Credit Karma gives you a little bit higher estimate of your actual credit score. If you want to know your exact score,
FICO,
you better get the credit report
Experian?
Directly from the agency. It's Experian, TransUnion.
TransUnion and
Equifax, yeah. And you are entitled to
For-
one free report every year. There is a government website where you can request it.
So
every year it's recommended.
You also
me
can
give you some
create
details
the
on
free accounts on Experian right now and actually keep up with your credit score. That will go like off the Credit Karma. But if you want to have like in deep, no? Okay,
I would
somebody's
say-
shaking head right now. Go ahead.
I would say that we have to understand that applications like Credit Karma, CreditWise, anything that your credit card will offer you as the perk for having a credit card, it will provide you basic information, but it will give you fake scores. So it's not meant to be indicative of your actual score. Your actual score resides only in 3 places: Equifax, Experian, TransUnion.
But how does it reflect on
Landing-
FICO? Like, what's the FICO standing for?
FICO score is the combination of 3 scores from the 3 places that I just mentioned.
So
Those are the official credit score places, credit agencies with whom lenders work, whether it's a bank or if car dealership. Now, the bank may see and work with information from all 3 places, and car dealership, let's say, have an agreement with TransUnion only. But typically, the information in all 3 places is similar in the content. The scoring might be a bit different because they use a bit different formula. So the scores range from 350 to 800.
Yep.
800?
Yep.
850, I think, like the highest I've ever heard of.
That's probably Credit Karma score. That's not a real score. So anything less than, again, depending on a place, TransUnion tend to be the lowest of the 3. I forgot which one of the E ones, Experian or Equifax, tend to be slightly higher, but we're talking about difference of 10 points, and that's pure formula difference. Formula depends on credit utilization. Formula depends on negative information, such as any kind of write-offs,
Collections,
collections, late payments, which are recent, over 60 days. So late payment just 30 days is probably not going to count much. Late payment, which is 15 days, probably not going to make on credit report at all because it's only 30 days or more. So it will stay on your credit report. It will stay there for 7 years from the date when it's reported, which is important to understand if you're trying to clean your credit report from collections, because this gets a little bit tricky when it actually gets reported to all the 3 places, and it may get reported in a different time. So if it gets to Equifax, let's say in March of 2015, but it got on TransUnion in August of 2015.
It's going to be 2 different collections.
Then your Equifax 7 years later is going to delete it, but TransUnion is going to have it. So you will have a discrepancy in credit scores between three. So Credit Karma and all those credit card perks and apps on the iPhone, those are not real score things. Also, they do not provide any kind of tool to dispute.
Yep. So let me get to another question. That one actually from the crowd, from one of the members of the Northeast Philly Connected group, and his name is James. And the question was, how about a question asking, how do the stimulus checks, pandemic unemployment, and the other government aid complicate my tax return? How do I file if I receive one or both of them, or all of them, or all of those benefits?
So,
Child stimulus, PPP, etc. And this tax year.
So let's go piece by piece. Stimulus is not taxable. So last year we had 2 rounds of stimuluses. First one was 1,200 per person plus 600 per child if child is under 17. Second round was mid-December to mid-January. That was 600 per person. And the next round is coming most likely in April because it's kind of like a done deal. It's going to be 1,400 per person. This is all tax-free. Now, unemployment insurance. That's taxable for federal, not taxable to the state. Unemployment insurance is the state insurance program. So therefore, state does not tax it, but federal government does. And a taxpayer would pay basically at the rate of where your tax bracket is. Tax bracket could be 0%, could be 10%, could be 12%, could be 15%. It depends on overall income and your family size. So unemployment compensation is taxable for federal purposes. What was another item? You mentioned stimulus, unemployment. What was another
there was
item?
stimulus, PPP, child stimulus, unemployment,
Child stimulus.
any type of government aid, like food stamps, for example. Let's say, does it goes?
No, that's not taxable. In terms of PPP, the rules have changed on PPP. If PPP was forgiven, and Dmitry will tell you for sure because they did change the rules. What's the latest on the PPP forgiven amount? Is it taxable?
The latest is that forgiven loan amount won't be included in taxable income.
Will not, right?
No.
Okay. So the latest and greatest that the PPP forgiven amount will not be included in taxable income for the company.
Very good news.
So you're not being taxed on
No
that.
taxes.
No taxes. No taxes on PPP.
No. You're disappointed.
I'll be okay. I'll be fine. It would be
a bit
You'll survive.
Fine, yes,
Don't worry about
definitely.
it. I mean, the purpose of this was to stimulate the economy. It would be a bit counterproductive if it was taxable. I mean, don't you think so?
That's my financial situation after you just told that. Somebody's dancing with my coffin. Can I choose to be 1099 contractor when I am hired by an employer?
No, you don't have a choice. You can discuss it, of course. However, there is strict rules from Department of Labor. What is an employee and what is a contractor? So,
can you define?
Yes, employee is somebody who A, has a set schedule, B, is being supervised, C, does not provide own equipment to work. So basically,
so if you are using the company equipment, company vehicle, working in a company clothes, on a company property within the company regulations, rules, and insurance, you shall be W-2.
The main word here under companies, rules, and regulations. And basically, if you're subject to human resources rules, you're definitely an employee.
So
contractors are a little bit different kind of animal. It's they typically have their own equipment. They typically do not have the set work schedule because it's meant contractors
Meant to
are
be as
meant to
self-employed.
complete the project
Meant to be as self-employed.
and be independent in hours or in timing of when it's completed, as long as due date is met. So this is what a contractor should be.
So definition of the contractor is you're self-employed, you are not working under any rules or guidance of the employer, but the actual code that you are performing, that is city or state codes, that's the only regulations that shall regulate you.
Another difference is that who is paying for your coverage. Whether you're paying for your liability coverage,
if you are under the liability coverage of the company, does it mean that now you're W-2, or technically supposed to be? Or if you carry your own insurance, or if you don't carry any insurance, you just written down the exemption as a contractor.
Well,
difficult questions, huh?
Let's paraphrase it. Let's pretend that you're a company.
Okay.
And you have a choice to have me as an employee or a contractor. What would you choose?
Financially, I would assume that 1099 would be cheaper for me, but I'm not sure about the safety of the question. I'm not an accountant, bookkeeper, or, well, like, my relations to numbers is usually just to enter the PIN code on my phone. That's all I know about it.
Okay, so you would choose most likely to have it easy to pay me once a month, let's say, and to issue 1099 form and be done with me. That's what you would like as an employer, and this is what is a tendency, especially in the past, for employers. The tendency was to misclassify people as a contractors when they're in reality were employees, because this is how employers save on their half of the FICA and Medicare taxes.
Mm-hmm.
This is how employers would basically say, hey, show me the proof of your liability insurance, and we're going to put it in a file. So if something happens to you, you have your own coverage. This is how employers saved on not having workers' compensation. However, then it was a bit too many misclassifications, and Department of Labor stepped in with a new it wasn't regulation, it was like basically clarification one more time for employers, like, hey, just make sure if your contractor is actually reporting to one of your supervisors and your contractor has to show up at 9 and can leave at 5, that's most likely not a contractor. And a couple of companies were taken to the court and a couple of companies paid fines. So
where can you look up those regulations? So now that
Department of Labor website.
Can you provide me with such link so we can actually add it to the description?
IRS as well.
IRS as well. So IRS has very very dry language of writing their own tax code.
Mm-hmm.
If you want to read it in a more plain language, that would be the Department of Labor website, dol.gov. There are several questions where you put yourself in the shoes of the employer and ask, like, yes, no, yes, no, yes, no. And if one of the answers is yes, then it's most likely an employee. So to go back to the question, can you choose as somebody who is coming to work for you if you're an employer? No, but you as an employer, it's your obligation to classify me correctly.
Hold on. So I cannot choose a contractor, or I cannot choose an employee as an employer.
It's your obligation, your employer's obligation to classify me correctly. that's the right way of doing things.
So, no, obviously it is the responsibility of an employer to properly tax and deliver the payments to a guy or a girl who actually performing the job. That's obvious. But at the same time, I still could not get the strict guidelines or regulations that will stick up to the 1099 versus W2 that will be on a broader scale. Like A or B, it's like plus or minus. You have to be within this notch in order to be either qualified W2 or 1099.
So, again, question number 1. Do you require a person to show up at 9 and to leave at 5?
What about the gate? For example, it is a secured area and it's only accessible from 9 to 5.
Then you ask another question. Do you provide the equipment or they come with their own equipment?
Can you list the equipment?
Computers,
tools, name
tools.
it. You just, all right, so you want to work as a subcontractor.
Who leases the equipment?
I know a few.
No, I mean, in this hypothetical example. The person who does the work leases the equipment?
Person who does the work leases the equipment from...
Then this is the equipment belongs to that person, whether by means of leasing or ownership.
Okay,
so it means the employee or contractor in this sense provides the tools.
So it is still disputable?
No, not really. Not at all.
So do you have to dispute if you're using their materials then? Like contractors' materials? Or you're using the client's materials? It still qualifies as the purchase or...
No, I don't think materials are in this picture at all.
Okay, so...
I think you're talking more about the construction industry.
It's not just the construction industry. Pretty much any industry involves any type of tools, equipment, software, or name
okay,
it.
let me say this. The original question was whether a person being hired can choose to be a 1099 contractor.
Yep.
And I guess the answer is if you structure your relationship with the company for which you're going to do the work in such a way that you can be classified as a 1099 contractor, yes, you can be.
Okay, so that's a preference or a choice of an employee rather than a contract.
I think it's a matter of negotiating. So a company needs something done and they need labor or services for this something.
Okay, then to conclude it, there is no strict regulation. It's only an obligation to choose either between it's going to be W2 or 1099, and the employer and the employee have to come to distinct answer how they would like to work together.
No, there is regulation, and it's quite strict.
Let's repeat.
So there's different issues. Issue number 1, how you want to work together. What's the nature of your relationship? Is it one-off? I came to your office to paint the wall and, I brought my own paintbrush and you gave me the paint and we agreed, so by weekend this room shall be painted. I'm then a contractor. If you want me to work in your office 9 to 5 every day, do standard set of things and you pay me weekly, most likely I'm your employee.
There is one more caveat is that if you're structured as a corporation, you can be hired as a company and be paid as what's called B2B, business to business. So in this case, employer who is, let's say, a corporation will have you as a vendor and you also is a corporation. But it has to be very carefully structured and carefully thought of, because B2B, which is like the easiest way to do it, it's even easier than 1099. You can never substitute employee and pay an employee as a corporation, because that's going to be the grave mistake for employer, and actually they will send not FBI, but they will send investigator pretty quickly if it's not just misclassification between employee versus 1099 contractor, but if it's misclassification between employee and B2B relationship, you're looking at investigator who will come pretty quickly.
Very nice. So, okay, that I think was delivered and explained quite broadly and properly. It seems like we have about 9 minutes left. So before we're going to get into the summary, the very touchy question for a lot. I did not receive my stimulus payment for my dependent children or parents. Why?
Because IRS has been put in a tough spot last year, just like we all. There is a shortage of hands in IRS, understandably. Typically, they hire seasonal staff, and seasonal staff was not hired as much as they typically do for several years. So there was actually the deterioration of IRS services and IRS responsiveness, and even how you used to be able to get to the person in half an hour 5-10 years ago, and how you cannot get to the person now ever. So so chances are, if somebody missed the stimulus payment, is that there was a glitch in the system, or somebody just didn't process, or there was a mismatch between something, and there is just lack of human power to fix the system errors. The good news is that when filing now for 2020, anything that was owed to you in terms of stimulus that was not paid, it will actually be paid with your 2020 return as either increase of your refund, but what you were underpaid last year, or they will reduce amount that you owed. So for example, somebody get paid first round of 1,200, but never got paid 600. So that 600 will be added to the refund with the filing of 2020 return, or deducted from balance due from 2020.
Okay. And pretty much when you're going to file your taxes, most likely, if you have not received your stimulus.
There is a specific question. Did you receive it? Did you not? Did you receive first one? Did you receive second one? And this is how we're able to tell the IRS, hey, add 1,200 or add 1,800 or add $600 to whatever is being calculated.
Well, I shall mention that dependent parents were not eligible for the stimulus first time around.
Dependent parents were not, no. And dependent children over 17 years of age, no, they were not eligible. However, with the stimulus that's coming now, which will come most likely in April, that's actually going to cover pretty much everybody, and it's going to cover everybody aside from being an illegal alien. So
not the space alien, just a U.S. residency alien.
You gotta have a social security number.
Okay.
As long as there is a social security number.
Okay, so then you go under the tax, or you go under the stimulus.
Stimulus.
So as long as there is a social security in existence, money will be delivered.
Yep. With the next round, which is coming, like, hopefully in April.
Okay, I guess it is about a time to finalize. Is there something you would like to say, deliver, or you have some messages for anyone?
File your taxes and sleep well.
Well, Don't be afraid of numbers, because numbers are more afraid of you than you should be afraid of them. Do file taxes. Do not skip on any years. If you're in doubt, just ask. And if you're in doubt, just file. And again, going back to questions in the beginning, try to have a clear picture in your head of your own personal financial standing. What are your assets, personal assets? What are your liabilities? And this will help you to make a sound decision on whether to invest in pension plan or whether to buy a house. But just try to think of yourself as a company, see what you own, what you owe, and that will help a lot in making decisions.
Perfect, lovely. So I guess we're going to conclude and summarize. Today we had an intro on the financial advisory or financial education. That was your taxes. We had Alex and Dmitry here. Their information will be listed on this video or underneath this video. Get in contact with them if you will find any interest. And guys, thank you for coming out. I wish you the greatest. Thank you.
Thank you for
our
having
pleasure.
us.
Yeah.
Alrighty, guys. Thank you. Bye.
Bye.